Good afternoon, good evening, wherever you're at. It is Thursday, June 26th. The market has closed, and it closed much higher than it began this morning. Really nice day for stocks today. It's a good day to watch that portfolio go up. Really look back at how you selected the companies that you have in your portfolio. Did you look at the intrinsic value? Did you look at the free cash flows that company produced? Did you understand their place in their market? Are they a desirable company? Do they have competitive advantages? Do they have moats so they can keep competitors out and then keep all those profits and keep growing? All that type of analysis is what we do in this channel. We look at stocks and try to have a long-term perspective and buy great businesses that are just going to keep getting bigger, more profitable, generate more cash, create more market cap, pay dividends, buy back shares. That's what we want out of a company that we own. And today was a moment where I could kind of take a small victory lap on some stocks. Let's take a look. Let's take a look at some of these stocks. Meta, that's my number one position, and it was a nice gain. Geez, I probably made close to $8,000 on Meta today. Nice job, Meta. And it is crushing it year to date. I'll turn on the year to date heat map after I go through the 1 day heat map just to do the highlights, and then we'll come back to it. Google hasn't had a great year, had a decent day, up 1.68%. Netflix is having a boom over the last 6 to 8 months, just going up and to the right. Broadcom had a great day, up and to the right. Amazon flourished, up 2.42%. These are massive cap companies. So when they move like this, it moves the market. That's why the market was up so much. Microsoft was up 1%. Uber, 2.44%. That stock is flourishing, just doing great. Nice job, Uber. Looking away from that space, looks like defense contractors were having a party of stocks going up. That looks great. Energy had a good day with oil up. So energy had a good day. Materials did have a decent day today. Material stocks went up. Disney went up. Mickey Mouse was happy. Banks went up nicely today, by the way. Regional banks were up, and I know the big banks were up. Here we go. Here we go. Here's where it's at. Now, this is a stock that I own. Citibank went up 2%. It's up really nicely over the year to date. JP Morgan was up. So it's just a lot of stuff to be happy about. And again, go back to where you made the decision to buy one of these stocks. At what point did you decide that's the business I want to own? That's where I'm putting my hard-earned money, this capital that I've, spent maybe years or decades accumulating. I want that capital to grow. I want it to grow because I worked really hard for it. Now I want my money to work hard for me. Year to date, let's look at the year to date heat map. This is the year to date. How we doing 2025? How is it treating these companies? Let's take a peek. NVIDIA, the most valuable company on the planet. NVIDIA, 15.44, taking care of the owners of the company. Broadcom, killing it. AMD, crushing it. Microsoft, destroying it. Let me see how many adjectives I could use. Palantir, pulverizing it, just crushing the market. 90% return. Get out of the way, stock market. Uber, 54%. Again, think back. When did you buy that stock? Did you believed in the business? You think it's going to go up? Maybe it's discounted and you think it's going to bounce and go higher. Maybe the fundamentals look so good, they're just going to keep getting better. They're just going to keep moving up and to the right. Uber is that type of business for me. I just believe in the business and the fundamentals look terrific. Just awesome fundamentals. Looking at Citi, this is kind of an old school name, up 20% year to date. I will take it. This is a bank. away from technology. I love technology stocks. I love communication companies like Google and Meta. And Citibank is getting the job done, up 20%. That, I believe, is the best priced big bank in the market. Better price JP Morgan. I was a JP Morgan stockholder for a long time. Have a lot of respect for that business. But I thought I can get more value from Citi. And so far, so good. Our friends over at Visa have been a little under threat with stable coins coming into the picture, but it looks like, hey, they're gonna put stable coins on their radar and try to adapt, change, innovate, and adapt to the market. If the market's going to want stable coins, Visa wants a piece of that market. And if we go down, Berkshire's up 7%. At one point, this thing was just killing everybody. Like, call it 3-4 months into the year, especially around April, everybody's going to Berkshire because it's kind of a safety stock. But Warren Buffett decided, hey, I'm going to kind of pass everything in from a leadership perspective over to his successor, and the stock has been selling off ever since because the Buffett premium maybe is leaving that company. Some other financial services companies have been flourishing. Some of these brokerages and platform companies doing great. Goldman Sachs up 20%. These numbers look great. Amazon's down 1% year to date. Apple's down 19.73. Whew. Not good. Not good at all. Meta flourishing 24.01. The best performing out of the big caps. That's the number one player. Google not doing so great. I mean, it's not like completely bleeding out like Apple, but it's not doing well. It needs to get on a nice upward trend. Netflix is getting it done and then some, up 46% year to date. General Electric up 50%. Costco up 7%. Walmart 6%. Abbott Labs up 18%. Gilead Sciences up 16.5%. There's plenty to go around, man. Utilities have been doing well. Some material stocks, especially the gold miners, they've just been cleaning up. So there's a couple red spots. Tesla's way down. Tesla and Apple are not doing well this year, collectively year to date. Picking the right companies, finding the companies, deciding that's the right company for me. That's the art and the skill of being an investor. Trying to determine what are the fundamentals, what are the valuations that I'm looking for. I don't have to be perfect at this, and I don't have to know every single sector, inside and out. I just need to know which sectors I'm good at and go play in those sectors and just do really well there. I am doing really well year to date. I'm just killing it. Personally, I'm very happy about that. Did well in 2024, 2023, and trying to figure out how do I make the second half of 2025 as good as or better than the first half. So I'm looking at sectors that I think maybe are going to take their turn in the second half. And if you want to know what those sectors are, become a member. I'm going to share that with members on member-only videos and share my strategy as I press forward. As I look at my research, I look at companies and I decide, that's the best place for my capital to work. Remember, the reason I started investing in individual stocks some time ago is that I was working very hard. I put my money, like most people, in ETFs and mutual funds. And those mutual funds were underperforming, and I was paying somebody to underperform. And I just decided, I want to go at it on my own. I'll learn a lot more, and I've exceeded any kind of performance I would have depended on from those guys. I didn't want to wake up when I was 55 and I didn't have the skills to invest. I wanted the flip side. I wanted to wake up when I was 55 and be economically independent, have a skill set to really just flourish. And, not that I'm ever going to be as successful as Warren Buffett, but he's a great example. I'd love to trade until, frankly, I'm about to die. Just trade for the rest of my life, invest for the rest of my life. It doesn't take physical ability, it takes mental, it takes experience, it takes skill, a process, and that's what I have. I've developed it over the years, and it's a really fun year because as we look at the year, we started off, and we're coming off. I'm going to show the 5 year where we had a 24 that was just doing great. Trump won the election. Go stock market, phenomenal year last year. And it kept going for a little bit of time going into February. Then the market decided, you know what, guys, enough of this, enough of the fun game. Let's play the tough game now. Let's see who is going to know how to adjust. The market sold off very fast. And those who had cash, dry powder, could make money. I found myself with cash and dry powder because during this time, I started to say, and it almost felt kind of like I was saying things that people didn't want to hear. I was beginning to say the market's greedy. I want to build up some cash. I want to have cash so that I could take advantage of a pullback. Pullback happened, and I had the capital to do so. And ever since it hit a bottom, boy, the stock market's just taken an upward course, up 23.25. The S&P is since April 8th. That is on a tear. I'm beginning to think the market's greedy again. So I'm not flipping out about it, but I can just tell you I am beginning to generate some more cash. I think the market is just pretty much ignoring or really not taking news and believing that it's all that bad. News items like the conflict between Iran and Israel brushed it off, just kept going. We have an economy that's not booming, and we had actually negative GDP in the first quarter. Stock market doesn't care. We're good. What it did care about was tariffs. That's what caused, if we would have gotten in a tariff war, it would have been ugly. The whole world economically. And once, our president said, you know what, I think if I keep going down that path, I'm going to take everything down. And I don't think he liked that type of scenario. And he pulled away from that. Once he did that, the market said, all right, so the tariffs are not going to be, absolutely a complete, severely bad outcome. It's probably going to be some negotiations, a little bit of increased tariffs here and there, and our products are going to be cost a little bit more because there's going to be a tariff applied to them. So once we had that kind of news away, that was the big item. Other stuff, the market's just dealing with it and saying, yeah, it's not going to prevent us from going up in the right stocks. You got to be in the right stocks. If you're an Apple, you're still waiting for that stock to go up. And I don't know if it's going to go up anytime soon because their strategy really, it's a strategy they've had for 15 years, 20 years. Let's depend on that iPhone. Let's have a new upgrade. Let's have a new phone. Get people excited about it. And then they buy a new phone. Guys, we're done with that type of product cycle. Impress the market. And they have not invested a whole lot of capital. So they're kind of dying on the vine. So the market's going up and up. It looks like we've got some members in the stream. Looks like Shadow Guy is showing up. How you doing, Shadow Guy? Good to have you in the stream. So my plan B, if the market turns bearish, is to stay in the great companies that I want to own: Meta, Uber, Google Alphabet. I could go down the list, but have capital so I can buy potentially, let's say the stock market said, hey, we're going to take Meta down 20%. I'll be snatching up shares. Say the market said, we're going to take Uber down 30%. Give me more shares, please. I'd like more shares of Uber. So that's my plan if the market sells off. Now, in addition to that, I'm studying, where are there spots in the market where maybe the rally hasn't been all that big in that space, and I can find some value that I think could start to work. And I'm going to start, doing some videos there. I think healthcare has some stocks that I'm going to buy into. I think you know which ones those are, Shadow Guy. I've been talking about them for a little while. Materials had a pretty good day. I'm still waiting for that market to turn. There's 4 stocks that I'm buying into there. I think materials can really make it happen if we get this tariff kind of cloud completely away and the economy starts to work. I think materials are going to do well. So those are 2 examples of where I think that could give me some performance for the second half. So it's about, adjusting to what the market is going to provide. If the market's just going to be in a boom cycle, or I should say an appreciation cycle like we're in, hey, thank you, stock market. But I am selling some shares. I am selling some positions all out. Not going from like 100% invested to 50% invested like Michael Burry. No, he's awesome and he can do what he does. I'm thinking I was like 97% invested. Maybe I want to be 90% invested and have about 10% cash. That's what I'm talking about. All right, so good question there. Thank you. It looks like Brandon. Good to see you, Brandon. Can you talk a little more about coin? Looking at value, yeah, that is a very good conversation. I would love to talk about coin because we're going to talk about big picture a little more than the fundamentals. And I'm glad you brought it up. So we're going to hit coin first. And that's how we operate on the channel. If you're a member and you want me to talk about a stock, you do exactly what Brandon does. Put it in there. We talk about it. You're not a member and you want me to talk about a stock, $5 super chat, and I talk about a stock. Become a member, and then you can do the same thing that Brandon just did. So keep that in mind. All right, so we're going to talk about coins. Let me just finish my thought on a couple of things just to make sure. Had some opening comments. Okay, so we're good there. Market's going up. It's been a really nice week. It's been a great month. I wasn't quite sure what we were going to have this month because this rise, it just shot out of a cannon, right? And I'm like, as we started June, and where did we start June here? Right about here. And I think the 31st was Memorial Day. I forgot. So June ended up being a positive month. And it's like, man, what a good month. And May was a good month. April had a real big drop and a real big rise at the same time. So, a little bit of a surprise. I think the market's a little greedy, but the market's going to do what the market's going to do. And if it keeps rising, great, awesome. I'll take the gain. Shadow Guy, you want to talk about Amrise Wholesome? Yeah, let's take a look at that. That is a new issuing from the spinoff from Wholesome. So let's take a look at that. All right, so let's talk about Coinbase. So Coinbase is a really satisfying investment. So Coinbase, when it came out, I've been an investor in Bitcoin since 2017, and my feelings about cryptocurrencies have evolved. 2017, I'm like, well, it makes a lot of sense because we have a connected world, meaning we have computers connected. We do so many things in a digital form. It makes sense that, you would have a digital currency created purely as a digital currency without any government being able to influence it. And all those things I kind of said, that makes a lot of sense, but it's totally brand new. Coinbase came out and they were one of the early players. Now, buying into Coinbase during this era, it was like many IPOs. And I'll say this again and again and again. IPOs are risky. Okay, so we have Coinbase here, and I'm going to show you our friends over at Circle a little later. I'm not going to lose my stream of thought. Now, as Coinbase started announcing earnings, I saw that they had really good cash flow profitability, and they would grow when investors would get excited about cryptocurrencies. So when we look at the valuation, which Brandon, you have access to, keep in mind, you're looking at all the businesses that are already established. We look at Coinbase right now. If I look at the business that does cryptocurrency exchange, right? People go there, they buy Bitcoin, they have to pay a fee to Bitcoin, as well as other things like Ethereum and other coins they buy. They also can make money by holding those coins and holding treasuries and so forth. They started making money because institutional companies like the Vanguards and the, Charles Schwab's, they wanted to have ETFs where it was Bitcoin ETF. So they looked over to Coinbase and said, hey, can you help us with this? We'll pay you money, but you secure the Bitcoins and you help us administer this particular ETF or fund. And Bitcoin gladly provides that. That's the second business that I'm going to refer to. This valuation includes those businesses. Now, what happened recently that's changing the game, and we don't have numbers yet, is Coinbase is trying to establish two new businesses. The first one is, and they already have this business, they already sell a lot of stable coins. They sell a lot of Tether and they sell a lot of Circle coins. Okay. Now, they already participate in that economy, but they want to go further and they want to actually be a payment platform for stable coins. So that'd be a new business. Those numbers are not in here. If it's approved and they can do that, that's going to make the business bigger. It's going to be the market they go after be larger. All those things are positive. That's not priced into the stock. So that's one business. The second business is Coinbase wants to be able to list stocks on Coinbase and actually put them in the blockchain. The blockchain, if you don't understand, is basically computers have a ledger and that ledger is updated by computers simultaneously. It's virtually impossible to create fraud on the ledger because simultaneously computers have to agree on the transactions. So the new listing stocks on Coinbase business is not in this valuation. So when you look at this valuation that you have access to, a month ago, this thing was completely, I'm not going to say valid, but it was completely aligned with the two principal business they have. But they announced those new businesses and really the market loved the news. They're like, well, we believe Coinbase can execute on that plan on the stablecoin transaction platform. They have a lot of credibility. I think they're going to pull that off. So that business, I'm like 90% sure that's going to happen. So that's going to add to the revenues. It's going to add to the profits. It's going to add to the cash flow. The listing stocks on the blockchain, now that one I'm excited about, but I'm not certain that's going to happen. Should it happen? I think it should, especially if we want to go to a 24/7 trading system, platform, ability. Robinhood's trying to go there, 24/7 trading on some stocks. So, Brandon, I'm trying to share with you why I'm holding Coinbase. I'm excited about Coinbase. I'm not selling Coinbase, even though I'm seeing a 17% premium price on Coinbase. It's because these numbers don't take into account those two new business opportunities. Okay, so that's why I'm excited about Coinbase. I think the rise in the stock is rational. The market's processing that news, that information, and saying, yeah, we got to price that into Coinbase. They're going to be bigger. They're going to be more important. And to me, one of the reasons why I bought Coinbase is in the cryptocurrency area, they have arguably the most credibility. They're a crypto only company. That's where they started. That's what they do. They don't do a variety of things. When they do stocks, they're going to do it their way, which is going to be on the blockchain if they are allowed to. So one of the things that you get when you take the leader, the best company, the best operating company with the best ideas, with the best people, is the new opportunities that come up in the market. That company tends to take advantage of those. They're the ones that grab that market share. And Coinbase is proving that. So institutional investors, institutional companies needed a trusted partner to do Bitcoin ETFs and so forth. They went to Coinbase. Boom, it expanded their business. So I am bullish on Coinbase. Coinbase now has a market cap of $92 billion. I could see this stock double in the next year to 2 years because these new businesses are just going to make the stock more valuable, the company more valuable, more important. And that's what I want out of a company. I want a company that isn't just, it's, with all respect intended, our friends at Nike, they're having a decent after hours, right? But the Nike business, we know what Nike does. They do athletic footwear, principally. They do athletic apparel as well. And 10 years from now, that's exactly what they're going to do. Is there going to be like a new market for Nike to take on? Probably not. They're just going to probably do shoes and apparel in 10 years and maybe have some experiences to go along with that. But companies like Coinbase, how many more things are going to be new ways of doing business in the future that involve digital transactions and so forth? It might be that Coinbase takes on the stable coin, transaction business, and they, take a bite out of Visa, MasterCard's market share. That could happen. That's called disruption. When a new technology comes out that is deemed to be better or more favorable, better liked, it works better, all the things that you want out of a new disruptive technology. Stable coins might be that. It hasn't been proven out, but if it is, bye 3% transaction fees on a Visa. Bye 5% on American Express. Those paradigms were thought of in the 1960s. We're 50 years into that paradigm. So it's ripe for disruption. That's all I'm saying. That's why Amazon and Walmart created stable coins for their brand. So people could say, hey, I'll use my bank account and I'll buy Amazon stable coins. Then I'll spend them on their website. I already spent a lot of money on Amazon. Let me tell you, my household, thinking of vendors, right? I spend more money on Amazon than I do on my mortgage. Okay, that's the level of spend on Amazon because we buy everything there. We buy, as we raise kids and furniture, you name it, we buy it on Amazon because it's so darn convenient and you're getting a really good price. Saeed, good to see you. Very good to see you. Thanks for joining. 3-4 players in Robotaxi, too many. Yeah, very nicely stated. So Robotaxi is getting a little crowded, but stable coins, right? And other pieces to crypto. Keep in mind, for temporarily, and Shadow Guy brought up a good point, temporarily Coinbase is the only publicly traded cryptocurrency exchange. Circle doesn't do that. Circle just does stable coins. They want to have a network for stable coins. So that gives them a big advantage. There's a lot of credibility with that. Now, as Shadow Guy's mentioning, Kraken is going to arrive in the market. Okay, Kraken does what Coinbase does. So when Kraken arrives, that's going to be a competitor to Coinbase, and I think Kraken's a good company. They're just arriving a little late, right? Coinbase is kind of out there doing whatever they want, so to speak, taking over market share. And Kraken is a nice company. When they come into the space, we'll see how well they compete against Coinbase. For all we know, they take over. They're better than Coinbase. We'll see. Once they go public, we will see a lot more. We'll see what their fundamentals look like. if they make money, how they make money, and all that good stuff. So, man, isn't stock investing super interesting and fun? We get into industries, especially these new ones, and you see how things are evolving. It's almost like watching a plant grow over time. You see these seeds of a new industry get planted. Some of the sproutings, they don't make it. They either have too much sun or not enough water or the nutrients in the soil aren't right. So maybe out of the 20 different seeds that were laid out, only 3, kind of sprout. And then those start growing into a plant which flowers or maybe provides fruit or a vegetable. And some of those plants end up being, plants that last, 10, 20, 100 years. They turn into trees. And if like Amazon is an example, that's a gigantic redwood. So Coinbase is almost like all these seeds were put out there and it's beginning to grow into a tree, into a strong company that has its place in the economy, that has, the way I like to say it is, they own a good part of the future. A lot of companies own a big part of the past. Nike, they own a good part of the past. I mean, I love Nikes. I've been wearing Nikes since I was 10 years old. Love Nikes. But they own a good part of the past. Do they own a good part of the future? Are they going to be part of AI? Are they going to be part of, e-commerce transactions? Are they going to be part of money transfers being, going peer to peer around the world? No, but Coinbase is. They own a part of the future. So good stuff. I'm glad we got into Coinbase. Thanks for asking. Let me keep moving along because I think I'm going a little too long on Coinbase. So let's talk about, let's go to a little bit more of an old school company, which is a new company now, but was spun off from an established company. It's not showing up there. Let's go over here and see if Amrise is listed. It is. This company, I believe they just IPO'd. So they IPO'd June 23rd. So this one, man, this one is still under warranty. It's been a public company for 3-4 days. And let me get re-familiar with this company. They came out of Switzerland. They do building materials, okay? And they focus on building materials in North America. The company was incorporated in Switzerland, and they operate independent of Holcim, okay? Taking a peek at their website. Just want to get my head around the kind of products they have. So portfolio premium brands. So recycled materials, okay. Climate resistant. So they're doing all kinds of products, and these products really do make construction that much better. New homes are so much more comfortable than really old homes. I think if you've experienced the difference, you know what I'm talking about. All right, so that's what we're dealing with. Now, the stock, again, back to Coinbase as well as any other IPO, be careful with new IPOs because they tend to come in with a lot of fanfare and then they fade. The businesses may be excellent, but you just want to be careful at the beginning. You don't want to jump in too early because you may be buying a really good business that has a chart like you saw with Coinbase or Robinhood. I mean, that can go on and on. Uber, all these companies that are terrific businesses, they were out, they faded, and then they rallied again. Well, I'd rather wait for the fade, buy at a really good price, and then make lots of money. So that's going to be my approach. So this one here is in US dollars. Man, I'm surprised by the market cap. Look at this, 55 billion. This is a spinoff. Wow, that's a pretty big market cap. PE looks a little high for a building material company because it's an industrial. And then we got forward P of 18.75. They have a pretty nice little growth rate there. 8% looks good. The quarterly. And didn't give me a growth rate on the quarterly. All right, no problem. Now, one of the reasons why I wait on IPOs is here I've got 3 years of data. And FYI, the data in 24, 23, 22 was, kind of, they gave it to us. I'm sure it's accurate, but it's different than the data that like Nike announced today. And that data gets scrubbed by analysts. They get asked questions about it. Nobody asked them questions publicly about 2022 numbers, 2023 numbers, or even 2024 numbers. So now they're being asked about these numbers, right? So these are better numbers. Now, if we wait on IPOs maybe a year, we get to see 4 earnings, and we get to see how they answered questions on their earnings. So we get more information, and we get, I think, a better confidence level in what they're doing. Now, these guys, they do have a high cost of revenue because they're making materials. They're putting material cost into it, labor cost burden into that prime cost of the product. So their margins are not terrific. They're in the 20s, gross margins. So gross margin 25.99%, but they do keep a lot of that in the form of profit. So that's good. Now looking at free cash flow, 1.35 billion in free cash. For this type of business, I'd probably have an upper end of 27 billion. And boy, that price is kind of high. That is a little too high for me. When we look at their balance sheet, they do have some debt, so that makes the valuation even less. I'd be like maybe $20 billion in market cap would be where I think it's fairly priced, actually. And so I'm really far away from this valuation. And we get to pick any company we want to invest in. This company has 25.9% gross margins. You look at, Micron has low margins, but a stock that did really well today is Astera Labs. These guys are new. They IPO'd recently, but I'm going to show you their chart. And they have 75% gross margins. Well, I'd rather have bigger margins with more profit, more cash flow. There's just more left there. They leave 22% of their revenue in the form of cash. So this is just, to me, a more desirable business. And I get to pick whichever businesses I want to buy. There's no rule that I have to buy any particular one. Having said that, when we look at the chart on this guy, let's take a look at it. You see how this IPO'd. It had a run, it had a fade, and then the market got crazy about this stock. It had a second fade, and then this was the time that I started to buy, and the stock's flourishing now. And I think this stock's going to flourish in the future. But these IPOs, we've got to be careful. We may be buying a terrific business, but if you buy near the IPO date, you may be buying a stock price. It's going to take a long time for you to start making money. And that's not what I'm trying to do. I'm trying to make money, as quickly as possible, but I want to make it over the long haul. I want to make the maximum amount of money. And just experience has taught me IPOs are a little risky. Let's just take our time on IPOs. So that's Amrise. And those are my comments there, Shadow Guy. Thanks for asking. All right, so Nichix, good to see you. I think I covered. So if you're not a member and you'd like me to look at a stock, I'd be happy to. It just costs $5. You buy Super Chat, and then I look at that stock, and that's just my way of making it clear that I really appreciate all the members. We have a good number of members. We've been having great calls, but I want to really distinguish between what I do for members and what I do for non-members. And it wouldn't be fair if I do the same things for non-paying members than I do for paid members. So to make it a little fairer, if you want me to see a stock, buy a $5 Super Chat, I'd be happy to do so. So hopefully you understand, and I really appreciate you taking your time and looking at my live stream. Yeah, let me take a closer look at the data you're providing, Shadow Guy. And I'm working with the best information I've got. So if you have better information, I'd appreciate it. Thank you. Thanks for that comment. All right, so we went over Amrise and Coin. Really good way to get started. Let's take a look at Nike. Nike, man, geez, that stock has been through something, huh? So if we look at the Nike chart, right, we all know what Nike does. We probably own a couple pairs of shoes, but look at this. It's just been a downward slope for a while, down 64% over the course of 4 years. Oh, man, that is a trail of tears, I'm sure, for investors. And this business, has it hit rock bottom? Has it hit the worst is behind them, and now they're going to start building something? Well, the market likes what they're hearing. It's up 10%. And what's neat about stocks is when they get beat up like this and they get discounted so much, they can really rise quickly. Because look, their high was near $180 per share. Now they're trading for $62. If they get back to 180, you just tripled your money. If you took 10 grand, bought Nike, and it did go up to 180, you just turned that into 30 grand. So these are opportunities when you find the right businesses. Let's take a peek at their earnings and see what they had to announce. And right now, Nike's a $92 billion business. As shown there, they just have been getting destroyed. They have revenue of 46 billion, so they're 2 times sales is what you're paying for the business. PE is 20. They're not growing, they're actually contracting, so that PE is too high. If you're not growing, what are you doing with a PE above 12? I get their brand's really good, but if your brand's really good, you should be growing. Then forward P is 41. What the heck are they doing with a 41 and they're not growing? Analysts are in love with Nike, and I get it. I'm a fan of Nike too. I watch sports and a lot of people wear Nikes. I wear Nikes. I have a pair of Nikes right there. I'm wearing sandals as I speak, but I'm going to put those Nikes on when I go out tonight. And I just wore them when I went in the gym. So I am a fan of Nike, but I'm a bigger fan of making money. And I'd rather buy a business that I'm maybe never going to touch their product or service, but I'm going to touch all that money that I'm going to make. Like a Astera Labs made a lot of money on that stock. I'm never going to buy their semiconductors, but I'm sure going to enjoy the money that I'm making on it. And Nike is, just an animal that everybody understands. So you get a lot of retail investment because people can get the company. They understand it. They make shoes. They're good shoes. And they see how many people wear them. They're like, well, it's got to be a good business. Well, maybe, but the data is telling me for 5 straight quarters, sales are down. Well, that's not good. And for the full year, because I think they just closed, they have a fiscal year that closes May 31st. Their sales are down 10%. That's not good. That's actually very concerning. So we had a concerning situation. They're still not growing, but they're saying that, hey, the worst is behind us. Well, I'm going to pretend I'm from Missouri, and that's the show me state. Show me a couple quarters of growth, and then I'll believe you. So their business, 46 billion. Again, they've been contracting, not a good thing. The cost of revenue is 26. So what's their gross margin? Gross margin 42. And you see how their margins have been contracting? It's probably because they're having to discount their shoes. People are like not buying, so they have to run discounts. That's not good. If you're a really desirable business, you can raise your prices. That's one of the characteristics of a really good business. And top line revenue tells me that. If top line revenue is growing, that means that business is finding new customers, existing customers are buying more product, the business can raise their prices. But when you see a contraction in top line revenue, it's the opposite. Customers aren't buying the product. They are asking for discounts. It's all the bad things that you don't want to see in a business. So we're in the 42.7% gross margins. Not terrible, but nowhere near the top. I mean, I want businesses that are 70, 80, 90% margins where possible. You look at Meta, that's where they're at. That's why Meta is so darn valuable. These guys are profitable. Their free cash flow is decent. And if we look at their cash flow, 1.5 billion, right? They're not growing, but they're Nike. So the way I do this back of the envelope, okay, take 1.5, that's an easy number to multiply. If you multiply it times 10, we get 15 billion. I'm going to multiply it times 30. I'm going to give them a lot of respect. They're not growing, so I typically wouldn't do that. But when I multiply it times 30, I get to 45 billion. Well, that's nowhere near 92. So what would I be doing buying Nike? Their cash is not that valuable. When we look at a value of a company, remove the Nike name, right? Let's just pretend this is ABC company. We don't really care what their product is, but we care about the cash flow, profits, and the growth. Well, their cash flow is 1.5 billion. So we know that's what we get every year, and they're going to grow that. Maybe they're going to grow it by 10%. We can do a net present value calculation on that type of cash flow, and that's exactly how I've valued Nike. So let's take a peek at the valuation I have for Nike, and then we'll start putting a little more science into this art of investing, because I like looking at the big picture. I just explained the big picture on Nike, but let's get down to what are the specifics. How is this business going to grow? And their cash flow is actually 6 billion. I was looking at a quarterly number, by the way. When I look at Nike, it is fairly priced as we sit here in front of you. Now, why is it fairly priced? Is I looked at the wrong free cash flow number when I was making those statements. I looked at it quarterly. Let's go back there and explain that. I think I was stuck in the quarterly, and free cash flow is around 6.6 billion for the last full year. And this number is going to change this year. Okay. So when I value Nike, it is fairly priced. Now, I'm seeing that their revenue has been contracting. I don't want to buy into this business. Show me a couple of quarters where you're doing better. And I mean, there's plenty of businesses I could find that are growing way better, that have way better margins. So for me, Nike's not an investment. For those that are like, would really like to be in Nike, it's fairly priced. Once you go up by that 10%, you're probably going to be, paying a little bit of a premium. Now, I would pay fair price for a business like Microsoft, Meta. These businesses are just super valuable, okay? But I'm not going to pay fair price for Nike. You have to give me a really good discount. And a really good discount is not available on Nike. So Nike is not an investment for me. I like to look at a business and not just necessarily follow the herd, so to speak, that everybody's saying, hey, Nike hit their bottom and now it's investable. Well, I'll let other people do that. I'm seeing that the market just abused these guys because they were losing revenue. Well, they haven't proven to anybody that their revenue is going up. No. Show me a quarter or two of revenue growth, and then I'll believe that you guys are a growing business. And give me the story that comes along with that revenue growth. Hey, we're growing revenue because we started this new product category. We did some things that are different that are going to work to make us a bigger company. Those types of things, when they change their big picture narrative and they show fundamentals, now I'm a buyer. Okay. I might buy into the story and see the fundamentals. Okay. Now maybe I'll be an investor. So don't mean to badmouth Nike. I'm still going to buy Nike products. I'm still going to wear them. They're nice shoes. Adidas provides nice shoes. So does Puma. I've been wanting to buy a pair of Pumas because I don't own a pair of Pumas. James, very good to see you. Interesting, a data breach. Yikes. All right, so we went through Nike. And again, if you want me to look at a stock, you're a member, please put it on the chat. If you're not a member, $5 super chat, happy to take a look at it. Now, I was kind of cruising the internet, and I think it was on X. I saw that you had an order for Nike at $52. but it never got. Oh, okay. And that would have been at a discount, right? So that's good. So this company here came up. This is an investment that Warren Buffett has made. Pool Corporation. They distribute swimming pool supplies. Okay. Now, of course, people enjoy their swimming pools. When you have a pool, there's maintenance to be done. Over the 1 year, it's down 5%. Over the 5, man, this is not looking good. I wanted to take a peek at it because it's a Warren Buffett stock, and I saw it. Market cap's 11 billion, revenue is 5 billion. Okay, PE is a little high. Let's see what kind of growth they have. They're contracting. So they had really good years back here. During COVID, I guess a lot of people were getting swimming pools during COVID, taking care of their pools because you were stuck at home. Might as well have a nice swimming pool, go in the back, go swimming. That'd be nice. But now people are probably like, the heck with the swimming pool. We hate paying for that. Let's just buy everything on Amazon and try to cut some cost. And maybe some people are not maintaining their swimming pools because revenue is going down. Well, I don't like businesses that are showing a lack of growth. So that's the first big strike on this company. Oh, like the dividend investor guy, a tree just fell in your pool. Oh man, sorry to hear that. Man. So you guys are having a storm, okay? Well, good luck with that. Hopefully, no more damage happens. So this company here, revenue's contracting. Don't like that. Their margins, they're going to have about, I'm going to guesstimate 35% margins or so. 29%. It was a little high. So not great margins, okay? Free cash flow is 9%, because that's decent. But I'm not seeing any growth. So this business, man, I could probably say maybe 5 to 10 billion minus debt. And let's see how much debt they have. They have about $1.3 billion of debt. So yeah, there's no way I could invest in this business. This business is overpriced. There's no excitement. The stock's done nothing in 5 years. Some of, Warren Buffett's a legend, but some of his investments are like in really old school businesses. And, I'm compared to Warren Buffett, I'm quite a bit younger, and I've worked in technology for pretty much my whole career, except for a couple of years when I worked for an oil company, pharmaceutical company, and then I've been in technology since. Well, I'd rather invest in technology companies because I know that business. I've worked in it. I know enterprise software. I know data centers. I know that stuff fairly well. So I invest in and out of those industries, which is why I own like all the big hyperscalers except for Microsoft. I own technology companies, semiconductor companies, software companies, and I do well with it. Well, Warren Buffett likes these types of businesses. Interesting to see that, but it is not the right investment for me. Good luck, Mr. Buffett. All right, skipping along. Yeah, this one's just the numbers don't look good. The numbers do not look good. I want to see good numbers. All right, so we are humming along. We're through some of the stocks I wanted to look at. I did want to take a peek at some stable consumer staples. So consumer staples typically are not like a big category for me, but I also believe that when a particular, like a market's doing really well, obviously technology is getting a lot of eyeballs. Nvidia is doing great. Um, Companies like Meta getting a lot of eyeballs. Reddit is going up like crazy, right? Well, everybody's forgetting about consumer staples. Man, nobody's going to buy those. Well, it's a perfect time to look at them. When nobody wants to buy them, they give me good discounts. I'll take a look at them. Now, one of the legendary staple companies is Procter and Gamble. You go in your home, you're probably going to find a bunch of their products. You're probably brushing your teeth with some of their toothpaste, and they have paper products. They have all kinds of stuff that's in our homes. If you wash your clothes, you're probably washing your clothes with one of the detergents they're producing. Very stable business. Big cap, 371. So that's a big cap. You're paying roughly, call it 4.5 times revenue for the company. And they have a PE of 25, lower PE of forward PE of 22. They are discounted according to analysts, and they pay a dividend of 2.6. Now, when we look at the 5-year, it's done okay. Right? For a stable stock, it's not bad. The 1 year, it's done bad, down 5%. That dividend kind of cuts your losses a little bit. But to me, this is an opportunity, or it could be the beginning of an opportunity. Like, hey, a really well-known company sold off. Right now, nobody likes Procter & Gamble. Everybody's like, consumer staples, don't waste your time there. Okay, well, give me the right discount, and I will waste my time making money. So these guys, you can see that they have very low growth, and they did hit some negative, but just slightly growth in the trailing 12 months. You see that they had slightly negative growth, slightly positive, slightly negative, slightly positive, and so forth. So very stable. So when we look at this business, their margins are pretty decent, a little above 50%. So when they make the Tide and all these consumables we have at home, they are making about 52% margins on that product. Looks good. And their free cash flow margin, 17.9. Very good. Okay. If banks were to pay me 17.9 on my money, boy, I would put so much money in that bank. Profit margins are very good. And these guys are a real good example of other businesses, right? Just solid performance. I believe these guys are headquartered in Ohio, and really good business. So when I look at this business, it's $15 billion free cash flow. This business is worth about 300 minus debt. And we have 25 billion in debt. So these guys are worth like 275, maybe 300 market cap. They're still a little too expensive. And the fundamentals say, and what I'm doing back of the envelope, right? So multiply their free cash flow, which was 15 billion times 20. 15 times 10 is 150 times 20. 15 times 20 is 300 minus debt, which was net debt was 25. So I got to 375. So that's how I did it in my head. Just to get me in the game. Is this stock worth spending more time analyzing it, researching it? So just off the cuff, no, it's just too expensive. And the market's telling me, this stock's too expensive. There's other alternatives that investors are going toward. This one's not the right one. So I move on. Procter & Gamble's not the right one. Now let's go over to Europe. Unilever. Unilever, you may not know, similar to Procter & Gamble, household personal products. Where are they headquartered at? England, UK, but they have production and operations around the world. So they go to their end markets and they produce it locally. They're not going to be shipping bars of soap around the world. No, they're going to produce it locally. This one's $150 billion market cap, not as high as Procter & Gamble. Revenue is 62, call it 63 billion. So you're paying 2.5 times revenue, about the same amount as Procter & Gamble. PE is 25, forward PE is a little better. So they're discounted as well, according to analysts. Over the 1 year, this one's up 8%. Over the 5-year, hasn't done anything. But you see this upward trend that started in 2022, nice upward trend. Looking at their financials, they had a good growth year in 22. Maybe it was that COVID year or after COVID when we had supply chain shortages and they were able to sell more product and maybe raise their prices. So they're doing a little bit of growth, not all that exciting. They do semi-annual stocks out of Europe. You're not going to see earnings 4 times a year. You're going to see it twice a year. So, all right. So when we look at these guys, their cash flow is roughly about half of Procter & Gamble. You see how the valuations are making sense? Half cash flow. They have about half market cap. Procter & Gamble's a better known brand. So Procter & Gamble is priced a little bit too high. If we go 7.8 roughly and multiply that times 20, we're going to get to roughly about 160, 170 billion. And I'm going to minus debt from that number. Their gross margin is not as good as Procter & Gamble, a little bit lower, not much lower. And their free cash flow margin, not as good as Procter & Gamble, a little bit lower. So when we look at their debt, because I look at debt, I look at balance sheets, make sure we're not buying into too much debt. So we got about net $26 billion of debt. So this business is worth 140 to 150 billion dollars. It's at 150, no discount available. I don't want to buy a stock and just buy it to collect the dividend. No way. I'd rather just buy a bond if I'm going to be collecting an interest rate instead of a dividend. So this one is not looking good. Now, it doesn't mean I'm not going to look at staples in a month. Maybe if we stay in this bull market and the market says Unilever, Procter & Gamble, man, nobody's buying those. Maybe Unilever comes down to $45 a share or $40 a share. Well, maybe that discount is compelling and I would be willing to buy into Unilever. So that's how I'm trying to not necessarily buy into things that are working at this moment, but seeing something that may start working in a month, 2 months, 3 months down the road. That way I can be successful in the second half of 2025 because the first half's been terrific. Well, I'm not going to be successful in the second half if I don't do my homework, start doing some analysis, start finding the right stocks to get into and really improve my returns. So that's where I'm at with Unilever and Procter & Gamble. Struck out on both. So you don't wear Nikes? Ah, you do have a pair of high tops. Cool. Old school high tops. Nice. All right, guys. So I wanted to keep this stream a little bit short today. I was really happy with the returns that we saw in the market. So it was nice to say hello to everybody and kind of cover some stocks that you guys wanted to talk about, as well as covering some stocks that I wanted to talk about. I appreciate that. Let's keep our fingers crossed that the market's just going to keep doing what it's doing. And being in the right stocks, that's where the money's at. You know, trying to find the businesses that have a very good business, a very good big picture, doing the fundamental analysis just to make sure, okay, I buy into the story, but are they making a lot of money? Because I'm not buying stocks just to be, you know, a stockholder and I could tell people, hey, look, I own XYZ stock. No, I want to see the stock go up. I want to see like the appreciation Meta's had. I want to have the appreciation that more recently Coinbase has had, that Oscar Health has had. That's why I invest. That's why I do the homework. So, and as I approach the second half, I'm going to keep thinking, you know, first, I'm going to let my portfolio run. I'm going to let my winners run. But I'm trying to figure out where could I find value for the second half. And I'll continue to share that with members and keep doing my research, and I'll share it with you guys. So that is it for the stream, guys. It's going to be about a 1 hour stream. Sometimes we go 2 hours. And today I needed to get to something important. So I'm going to need to say goodbye at this time. Thanks so much for tuning in. Really appreciate everybody's attendance, and I really appreciate everybody's support. Thank you, and have a good night.